Hi traders, Shane from Global Market Trader. Hope you're having a great day. We're going to take you through now our V2 Cycle Trader training for the buy and sell setup, entry and stop. So let's have a quick look at the prerequisites for the sell. Okay, so for our sell setup, we need price needs to be at resistance. So you'll see once we go to our charts that the Cycle Trader prints both support and resistance on our chart. So what we're looking for is we're looking for price to be trading at through our resistance area to potentially take a short setup. So ideally we want to see price touch our resistance area or a predefined value above or below resistance. Okay traders, so the conditions for our buy setup, we need price needs to be at our support level. We need price to touch support or a predefined value above or below the support level. So let's have a look at how both support and resistance trade setups, so our buy and sell setups, look on our chart. So here we have a chart of crude oil on a 450 tick. So this is actually one of the settings we've got as our ideal setups for the lunch hour, so 12 till 2. I've actually got this marked up a little bit earlier, but you can see here that it clearly shows the red levels are our resistance points. So these red dots on the screen are our resistance levels. The green dots here are our support levels. And what we've got is we've got an algorithm or a proprietary indicator that actually prints up these dynamic support and resistance levels. So as price is moving during the day, you'll see that these support and resistance levels automatically print up. So what our goal is for the cycle trader, our goal is to basically, we're looking to sell off resistance. So we have a value, as I mentioned before, at resistance, above or slightly below. So our goal is to sell resistance and buy support. Now, if we sell this area here, for example, and I'll just highlight that with our clips, if we were to sell this area here, then we would be looking to exit the trade once our support level appeared. So if you can imagine that we're in the middle of a period of cycle trading, so let's assume for the purpose of the training session that we started at 10 o'clock. So we'll come back here and we're looking for our first trade setup. So that would be a sell here, and we would be selling on our first level of resistance that sets up, and we might decide that as soon as we get a print there, we're going to take a short trade, or it might be that we work our entry based on a touch of that level. Now you can see there that price doesn't actually touch that level, so if our requirement for the entry was a touch, then we wouldn't get a trade. But you can see that if our requirement was for the first candle close on our printing of the resistance level, that would be that level, that would be that candle there, and you can see that support prints fairly quickly after that and still no touch. So we've got support prints and then we push back up. Now on this occasion here we get actually a touch of resistance. So if, for example, we work our entry at the exact resistance level, and we'll mark that up on the chart, so that would be 107.77. That might be our entry point. And for the purpose of the exercise here, we're going to assume that we're working a 10-point stop. So our entry is at 107.77, our stop is at 107.87. So we've got a 10-point stop on the trade, and we'll just make sure that that doesn't take us out. No, it goes to 82, so we're all good there, and you can see the price pushes down. Now we get the support level print, so remember that once we get this support level print, we're actually looking to be buyers at that level. So once that actually set up and printed, we would go from being short in the market to potentially taking a long setup. Now if for example it doesn't hit this level here, then our rule might be that for the purpose of our training that, okay traders, so for our trade setup here on our sell, we're selling at 107.77, so that would be our entry there at 107.77. Now, with the cycle trader, you have two other options on the entry point. You can either work at at the level of resistance to sell, you can work your trade entry on the first close candle on the first print of resistance, which is there, or you can work an entry either slightly above or below that level of resistance. So you have a couple of options for your entry. So let's just go through those again before we continue with the session. Okay, traders, we're going to review our entry options. So price entry based on a touch of resistance. Option 2 is that we enter above resistance, and option 3 is we have our entry below the resistance level. So there are our 3 entry options for the sell. So let's go back to our price chart here and have a little bit more of a look at how that trade is setting. So what we've done here is we've actually taken the sell at 107.77. Our stop is 107.87. You determine what your fixed stop is. So generally when we enter the trade, our stop is fixed and it's above the level of resistance. And our target is not necessarily a fixed target, but we're looking for either our target to be the printing of support, so that support level would be a potential target point. So if we're manually trading, we can use that as our target area there. On order automation, obviously our target is going to be, our target generally will be a trailing stop. So what will happen is once price moves in our direction and we start to get the support level printing, our stop will come to break even, so we've got no risk on the trade, and then and our target would be the trailing stop, which would basically be this area here. So you've got a couple of options. If you're trading it manually, you can identify the target as the next level of support. If you're trading the strategy and you're using the automation, then your target may potentially be, which is clearly shown there with the red dots. So in this instance, price pushes down, our stop goes to break even at 107.77, and that would have taken us out of break even. We don't actually get a buy set up here on support, so we don't get a touch at all there. And our next sell setup occurs here at 107.82. But if we just basically go in on that chart, you'll see that it doesn't actually quite touch the support level, so we don't get a touch. So we'll go back out on that. But we do get a buy level support here, and you see that price does touch that support level at 107.52, so we would be in the market, and price pushes up, it prints the level of resistance. So as soon as we get a level of resistance print, then our stop moves to break even. So our initial entry is 107.52. Our stop would be at, say, for example, 42, working a 10-point stop, and as soon as we have that level of resistance print, then our stop goes to break even, because that's telling us that based on the premise of the cycle trader that we're potentially going to be getting a short setup, which we do. Now unfortunately for us, we don't actually touch that, that resistance level doesn't touch, but you can see here that price pushes back down, would have taken us out of break even. Then we get so traders, as price pushes down here, you'll see that there's a potential buy setup here at 107.29. Now our stop would be at 107.19. So in this instance, if we were buying off support, then in this particular trade we would actually get stopped out. But if we were taking a second attempt at the trade, then the trade would trigger in again, and we potentially would get a good push up here. Now you can see here that price moves up, and once the resistance level prints, then we move our stop to break even, and we're looking really for the price or the trade to basically go to break even, and then ideally hit its target or breakthrough. So at some point, so traders, as we take these trades, we're basically going to be buying and selling at support and resistance. So we're bought here if it sets up within the time frame that we've allocated to take the trades. So if our session finish time, say, is 12:30, then this system will take every buy and sell setup off support and resistance during that period. So if that hits there at resistance, then basically we'll go from being long to then short. So then if we're short here, price pushes down, we hit the buy setup, hit this area here, then that'll get us long. And so it'll just keep oscillating between support and resistance during the period that we've specified as our period that we're buying and selling the market. So let's go to another example of this, and this is probably a better one to show because this is the DAX. Now the DAX session we trade from 9 o'clock till 12 o'clock, and then from basically 1900 to 2200. So you can see here that this falls within our time that we actually trade, but it triggers it hits this level here, and so we're sellers here at, let's have a look at the time here, at 10:38, so that falls within our time, so we've sold. Now we automatically buy this level once this support level prints because we are buying and selling support and resistance. So we're selling resistance and buying support during the period that we've specified. So depending on what your particular entry point is. Now for the DAX trades, where basically I think our offset is -3, so we'll sell resistance 3 points above and we'll buy support 3 points below. So we get into the trade, and we've got a fairly good stop on this, and you can see there that once that sets up, still within our period that we trade, then our next, now it doesn't take us out here because this level here touches outside of the time we trade, because our trade period doesn't start again until 1900, so we don't get taken out of this trade. All that happens is that our stop goes to a trailing stop until the session starts again. Now the session starts again at 9:30 is up here, so you'll see that this trade here is at 2100, so or 1900 I should say. So there's our next session time, 1900, and it gives us a potential short. So we take that trade, and then that then gets us into a short setup. Now we don't get triggered into this trade here because price doesn't hit this support level until 12:30. So we can't take any trades outside of that 9 till 12. So the next possible trade for us to take is here at 1900. Alright traders, let's look at another example here. So we've got support setting up here at 108.60. So we're buyers here at 108.60. We've got a 10-point stop. Price pushes up here. Now you can see that it actually does here hit our level of resistance, 109.16, just a bit of a spike up. I'll just open that up a little bit. You can see we get a bit of a touch there. So that trade would be initially long, and then we get into a short, because remember that we're buying support, selling resistance, so we're sellers of resistance. Once this first red dot appears, which is our first resistance line, our stop goes from say a 10 or 15 point stop straight to break even, and we leave that there, and then as price moves up, then we'll use a trailing stop as well. So that'll allow us to capture some profit on the trade. Now once we trigger into the trade, then we're short and we're looking for price to push down to our level of support. Now what happens is that if our trading time is from say, we'll say our trading time hypothetically speaking is 10:30 through till say 11:30, and we get triggered into this trade here, we'll say it's at 11 to 11:40, we get triggered into this trade here, then we're not going to take any more buy setups. So that means that we'll be in this trade until we get knocked out on the trailing stop. So while we're in this trade, we're automatically trailing our stop down, and we don't automatically go into our next buy setup. So you can see here that once it falls outside of our trade time, then we're not consistently buying support and resistance. We then go to our trailing stop, and you'll see that it pushes down, eventually gets knocked out. If we use a 2-point trailing stop off that TP line, that take profit, you'll see it gets knocked out at around about 71, and that's how the strategy works. And you'll see